Hello traders, it is your crude oil daily forecast for the 15th of January 2015 for pipgain.com. Well, as you can see, in keeping with the hammer that was posted on Monday, we saw crude oil prices rally quite a bit yesterday. It's one of the strongest bullish candles we've seen in quite a while. And this was all despite having fundamental news to the downside. We had US crude oil inventories come in yesterday, which came in much higher than expected, which should have put bearish pressure on these prices, but despite that, prices continued to rise. So is this a bottom? We do not think so. This rally is most likely due to a short squeeze because the February options contracts expired yesterday, the 14th of Jan. So this might be due to a short squeeze, and anyways, we are long overdue for a correction here in these markets, especially if you look at Brent. You see all these red candles for the past many days. We expected a reversal around 50, but it did not happen. The price stood still for a couple of days before moving further down. So a correction is much needed in these markets, and we think it will bring back more sellers into the markets, and prices will continue to go down because the fundamental factors still remain the same. So we expect price eventually to start going back down to 40. Maybe not today, maybe not even in the next couple of days. It might even be today, but we might expect a continuation in this correction today. If you look at Brent, support $50 offers resistance. Beyond that, 51.8 does. For WTI, $50 offers strong resistance as well. So eventually prices will start to continue going down, and we are still short on this market. But one thing we are looking at is the spread between Brent and WTI. It keeps narrowing. If you look at the prices right now, WTI is actually trading above Brent. At this time, it's 740 in Singapore. Oh, well, Brent is closed, so you can't really rely on that. Brent is closed at the moment. But we see WTI, we see the gap narrowing, which is a sign that OPEC's strategy is working and that their war for market share is working. So the sooner this war is over, the sooner we can see prices find a bottom. So this spread between WTI and crude. WTI, of course, which is the US benchmark, and Brent, which is the global, or we could call it the OPEC benchmark. When we see that spread narrow and when we see WTI trading higher than Brent, then we know that a bottom is near. But for now, we are still short of this market. We think prices go to 40, even below that, before a bottom is reached. So that's it for now. See you tomorrow. Happy trading.